All right. All right. Thank you, everyone. My name is Lynn Voss with Golden Care. I'm joined today by Mike Simenstad from National Guardian Life. He's the Regional Vice President of Sales there. And today we're going to be talking about some of the hurdles that the long-term care insurance market had seen early on and how today's plans, well, today's customers and agents alike are the beneficiaries of those learning curves, those early hurdles. So Mike, I will go ahead and turn it over to you.
All right, sounds good. Thank you so much, Lynn. And hello, everyone. Thanks for having me today. And today we're going to talk about the role of traditional long-term care insurance in today's world of long-term care solutions. But then we're going to dig a little bit deeper and talk a little bit in depth about the learning curve that traditional long-term care insurance went through, and explain, I will call the negative residue from that learning curve, and explain how to properly, explain the viability of traditional LTC to consumers today, because obviously there is a lot of misinformation out there regarding traditional long-term care, especially with clients out there doing their own research. So without further ado, I'm going to get right into it, and I look forward to taking any questions at all from you. Lynn is going to monitor the chat box for any questions, so feel free to go ahead and ask any questions as we move on. I'm going to start, though, by saying that I truly do believe that right now is probably the best time to be talking about long-term care solutions with people, for a couple reasons. Reason number one is that the atmosphere, especially the political atmosphere, is creating more awareness than ever. And then number two, I will talk a little bit about the long-term care solutions market. But number one, the need to plan has never been greater than ever. And I will tell you, regardless what side of the political spectrum you are, right now with the new administration and with all the talk about government cuts, I will tell you that not only here at NGL, but other LTC carriers as well, are really seeing an influx of consumer interest, citing this reason. I'm afraid, Medicare and Medicaid benefits are being cut. Thus, I'm getting the feeling that I should plan for myself. Well, yeah, that's the thing. The overarching message right now from the government, our government, is that when it comes to long-term care, you in the great state, in the great country of America, you're on your own. And let me go back and put that back in presentation mode. But in the U.S., I think the message has never been more clear that when it comes to long-term care, you are on your own when it comes to planning. Now, I'm not going to go over every little bullet point in this presentation, but you'll see here it says misconceptions about Medicare and Medicaid still exist. Well, I would go beyond that and say most people don't know the difference between Medicare and Medicaid. Most people can really, give you two sentences about each of those, other than the fact that they begin with an M, and that when you turn age 65, they're going to pay for all your health needs. That's what most people think. And with all this discussion about cuts, people are realizing that geez, maybe, I guess I maybe should start to plan because these benefits that I thought I had looks like they may be going away. Now, most of those people on this call, I assume, are long-term care experts and, know the fact that Medicare, what benefits are payable by Medicare and the fact that Medicaid, what that's all about. But most people don't know. So I think, the message has never been more clear, right? Unlike many countries, especially the Nordic countries, Sweden, Norway, Finland, where you have, cradle to grave healthcare, it's not the way it works in America. You have to plan for yourself. So you have that, and people are getting the message, right? Which is good. Number two, the LTC solutions market has never been stronger and it has never been more expansive. And that's absolutely true. I mean, there are more types of solutions available now than ever before. I mean, my God, you have asset-based long-term care solutions that allow you to self-insure in a smarter way. Right? You could reposition some assets and obtain leverage while never giving up that asset. You could buy a multifunctional life insurance policy that does a lot of different things. You even get market participation and life insurance coverage. And if you need to have a long-term care event, those are accelerated. I mean, it's great. You have annuity products that are multifunctional. It's fantastic. But keep in mind the backbone of long-term care coverage, right, still is traditional long-term care insurance. And the great news now is that those carriers that are offering traditional LTC, right, the products and the carriers' experience have greatly stabilized, right, and they're recovering and regaining lost ground. In fact, there are new carriers actually coming in to the traditional market, which is great news. And those carriers that have entered the traditional market recently absolutely enjoy unique upside because they don't have, the legacy business to manage. And of course, and we're going to dive into this a little bit, the new pricing and risk assumptions absolutely have made the new product offerings in the traditional space much, much more reliable and predictable and overall better for the consumer, despite what most people think. So let's talk a little bit about what people want first, right? So people are getting the message that they need to plan. And the fact is that the menu of solutions, there's a solution for just about everyone. But what do people want? All right. Well, what people want is to make what they've seen as being an unmanageable situation, they want to turn it into a manageable one, right? As you know, most people that, are volunteering and seeking out information about long-term care solutions, most of those people have gone through their own long-term care event themselves, usually with a parent or a family member, and they want to protect their spouse, their children, their grandchildren from the same experience they went down to. Now, are people looking to pay every penny of a future nursing home stay? Is that what people are looking to do? No, it's not. They're looking to mitigate and better contain the financial and emotional impact of a long-term care need, because they've seen that this is something that is likely to happen. And of course, most people will say that they don't even want to think about nursing homes. They're looking to maximize their ability to stay at home. In fact, I like to call this stay-at-home insurance. That's what people are doing. They're looking to make what they've experienced as an unmanageable situation with a relative, they want to make it a manageable one. For the ones they love. And they absolutely want to do it in an affordable and predictable and stable fashion. So that's what people want. Now, the good thing today, and this is unlike, and we're going to talk a little bit about this, in the 1990s, which I will call the Wild West days of the industry we're in, right? The long-term care solutions industry. Unlike the 1990s, today, guess what consumers do? Well, they do their own research. Why? Because you can now. You have Google and you have, their laptop or whatever they have. You could do research on everyone, and everyone can become what they think. They're an instant expert all of a sudden. So, what do people do when they do their own research? Well, number one, they do a Google search for long-term care insurance. We know what's going to happen here, right? We'll talk a little bit about this. They also speak to the people they trust, right? Usually their trusted financial advisor. And hopefully in some cases, a long-term care insurance specialist. Maybe they received a flyer in the mail or something. They say, "No, you know what? I know of a specialist. He sent us something. Why don't we try that person?" A lot of people talk to their friends, media personalities, publications. There are a lot of places, but most people start with an internet search for long-term care insurance. The challenge here, and we all know this, is finding objective information sources and not coming across misinformation. Now, unlike the 1990s, when it was, or the early 2000s, in fact, when it was just traditional long-term care insurance, and hey, let's go, let's look at long-term care insurance and, see where we can get the most bang for our buck, and shop for price, and see what type of benefits you get. It's not as simple as that anymore, right? It's almost like you have a double whammy. People can do their own research, but now, unlike the 90s when you just had one type of product and you could spreadsheet relatively easy, now you have different types of solutions, right? It's not just long-term care insurance. You have long-term care solutions. And with long-term care solutions, you have short-term care, which is awesome, a great solution for a lot of people. Then you have the whole world of, we can talk about terminology forever. The little box that says LTC life and annuity hybrids, we can break that down into a ton of subcategories. So you have all of these, what we'll call hybrid, linked benefit, multifunctional life and annuity products, call them whatever you want. But bottom line is, people go down this rabbit hole, and what do they come across? They're doing their own research, and at some point when you Google long-term care insurance, you're going to see, well, long-term care insurance, traditional, rate increase, rate increase, rate increase. Hybrids are en vogue. That's what you want to look at. Okay, great. Let's look at hybrid products, which I will tell you, hybrid products are awesome. Again, it's just a great time to be in in the long-term care solutions market, because again, there's a solution for everyone. And even if you have, for people with a wide array of health issues, literally there's still a solution for, almost everyone, type of product, whatever you want. So, and let me modify my presentation here. Here we go. One moment here. There we go. Whoops. All right, I want to go back because I want to make sure you guys see everything. All right, I'm going to start here. And all right, so here we go right here. So the products can be very confusing, right? The hybrid products, as I was saying, and they're going to go through and look. All right, well, let's see what type of product. You have life insurance with accelerated death benefits that pay. What type of, so what does that mean? And what type of platform do we want? Whole life, universal. I mean, we're just looking for what we're looking for. I just need long-term care. And why do I need to make an outlay of high premiums. Why do I need to come up with $250,000 a month? What does all this mean? I don't get it. So, people do their research, right? And they get confused, right? And so, what do most people, based on their research, right? What do most people come up with? Well, they go down the rabbit hole of multifunctional life insurance, right? Hybrid products, and they say, my God, wow, these are really expensive. Why do I have to buy life insurance when really I just want that rider that comes with it? I just want, like I said, to mitigate a long-term care event for the least amount of premium possible. Why do I have to buy life insurance to do that? Can I just buy the rider? And a lot of people say this. An annuity, why are people, shoving an annuity in my face as my long-term care solution? I don't want to, invest, in an annuity. I don't want to put in $100,000. And don't we have, what's the deal with traditional long-term care? That's what I want. Pure long-term care protection, the most long-term care bang for my dollar. But it's telling me here in my own research, and I've even spoken to some of my, people I trust, such as my financial advisor and my neighbor's financial advisor, and they say, don't look at traditional long-term care. Why? Because companies are just going to raise your rates till you can't afford it. Right. And, read all these horror stories. So, you know what most people do after their own research? They decide they're going to self-insure, which, and people ask, how do you do that? Well, really, if you're going to self-insure, you're going to have to get all your neighbors and put in a pot of money and create an insurance pool, because the proper term is self-funding, right? So that's what people do. They do their research, and based on my research, I'm just going to self-fund. How do I do that? How do I do my own? And this is what most people go through, and it's a shame because they are being misled. And let's talk a little bit. We'll explore a little bit about this, and I think a good place to start, and probably the best place to visualize our industry and the past and the present of traditional long-term care is to take a look at a little timeline, which is also the learning curve that we went through. Now, I'm not going to go through every year on this timeline, but it's really interesting to look at. So, long-term care insurance, although long-term care insurance, initially was created as nursing home only coverage back in 1974. So, technically that's when it was, quote, born, right? But comprehensive long-term care insurance, as it looks like today, right? That covers, multi care in multi venues, right, including home health care and assisted living. That was started in 1985, right? But it really took off, 1989, 1990. Right, when carriers figured, boy, there's a big need for this product, and carriers started promoting the fact that, despite what most people think, Medicare does not pay for long-term care. So this product was brand new, and there was no, the pricing on these products was done largely by assumptions, right? There was no claims data, there's no experience data, no concrete data at all from which to price these products. It was based on guesswork, right? So all these carriers, starting in the mid 80s, late 80s, and then especially through the 90s, carriers started creating products, and one carrier, it was basically a battle of pricing and benefits, right? It's actually the natural evolution of an insurance product line, unlike what disability insurance went through in the 80s. So what happened, in a nutshell, when you look at this slide, look at the number of people that bought products, right? all the way through the 90s, up through the early 2000s, right? It peaked in 2002. 755,000 policies sold, right? So it just climbed and climbed. And look at all the people that bought products that were based on rates that turned out that were too good to be true. So you kind of had a double whammy, right? You had a lot of people buying a product that basically was mispriced, right? It was too good to be true, right? Because they were priced based off assumptions and pretty aggressive assumptions, actually. But I would say, in addition to that, and perhaps even more concerning at the time, was people who bought those products were led to believe that their rates would not go up, right? And why is that? Well, you could blame this. In fact, I think the carriers are to blame as much as the people who sold this product. The way you saw it in the brochures and the way carriers explained it and how confusing it was. All these products, and many of you were probably there and understood this, but these products, just as they are today, were guaranteed renewable, right? Boy, and back then, a lot of people guaranteed renewable. Well, what does that mean? Well, people were led to believe that, hey, as long as every year you pay your premiums are guaranteed renewable, right? And people hear the word guarantee. Oh, all right, well, that's great, fab. Boy, what a deal. Boy, this is incredible. So because of the low pricing, and this made things worse, this product, this product line really was sold as nursing home insurance. Hey, here's the average cost of a nursing home in your area, and this is in 5% compound. Geez, the price of long-term care services is going to be at least this much. Look at the pricing on this. This is what you need. It's guaranteed renewable. I mean, so I can't tell you. Look, with all the people and the number of carriers buying products in the 90s that you could see, marketing efforts highlighted lifetime benefit periods, right? You have unlimited benefits, 5% compound inflation, right? A couple of carriers had, for couples, a built-in survivorship benefit, right? What does that mean? Well, hey, if you have a couple and it's built in, it's not even a rider. You have a couple and you pay into it for 10 years and one spouse passes away. Well, guess what? Your surviving spouse never has to pay premiums again, right? He or she has mostly she, right? Because usually it's the husband that passes away first, will have a paid up policy and never has to pay premiums again. Well, I can tell you that there are a couple, especially one existing carrier with a ton of widows on the books with unlimited benefits, $600, $700, $800 a day, 5% compound inflation with no premiums coming in, right? So it really was a perfect storm of using assumptions and not actual data to price a product that was somewhat misled as guaranteed, with very, very rich benefits, all right? And here we go again, more let me get back to where I was on the slide. I don't know why this keeps doing that. There we go. So there we go. Now let's take a look after the learning curve, right? Sales peaked in 2002. And when it comes to long-term care, right, some of you may not know this, but with long-term care, it takes right around 10 years to get a solid read on claims trends and how that pricing, how those assumptions you made are working out. So kind of like clockwork, right? 2002, right? Carriers started saying, uh-oh, here come the claims, and boy, these assumptions were off. Turns out a lot of them were really off. So the claims came, the rate increases, or we'll call them rate adjustments, right, to make the products viable, started coming, and you had a lot of people who were misunderstood that, wait a sec, these were guaranteed. I pay my premiums every year, and I was told that they'd be guaranteed as long as I pay them every year. No, that's not exactly it. The carrier cannot, what guaranteed renewable means is we cannot cancel your policy as long as you pay it, but we can raise rates. I mean, it's health insurance. Most health insurance does not have guaranteed rates. Most people didn't realize that. So there you go. So starting in 2008 or thereabouts, you will see that carriers started exiting the market. They're just like, all right, well, we were way off, and you know what, we might just get out of this altogether and minimize the bleeding. And a lot of them got out. But you also had a lot of people, consumers, policyholders, who said, oh boy, this is not good, not at all what I expected, even though they have a great deal still, because they had a deal that was incredibly too good to be true that they bought, especially in the 90s, and even with rate increases, still had a great deal. It's not what they expected. So thus now comes the negative press, right? And so you had an exodus of carriers, and some carriers stayed in the market, weathered the storm, and say, listen, this is a viable market, we're going to stay with it. We know how product works, we know about learning curves, we're going to try to make this work, we're going to manage our old books of business and go forward and change our marketing message, and we're going to stay with it. Now, with that, especially in, right around the early 2010s, hybrid sales, right? You call them whatever you want, multifunctional life insurance, linked benefits were starting to be created, and they really picked up steam. And they were sold as an alternative to traditional LTC because the rates were guaranteed, right? You had a total certainty, no matter what, right? In many cases, and, product is live, die, or quit, doesn't matter. You got a guarantee. Well, that's great. But still, it did not accommodate, a lot of people who, are looking for just that pure backbone protection. They just want long-term care, and that's it. All right. So here we are. We'll go down to, let's look at about 2016. And, by this time, carriers, and the good news is, you see that learning curve, it's going down, but carriers are in learning mode at that point, right? They know that we now have, a really, really good amount of claims experience and pricing experience from which to price these products, right? And while they're more expensive, obviously, you call them more expensive, more realistic, whatever you want to call them, than the products that were sold in the 90s. The bottom line is that the pricing, the carriers now use actual experience from which to price these products, and they're reliable, right? About this time, right, about 2016 is when NGL enters the market, and I'll talk a little bit, just a little bit about NGL in a little bit. I mean, that is the carrier I'm with, and so that's when NGL entered the market. They entered at a time when the learning curve was pretty much already achieved, and then here we go today, right? You currently have 7 carriers selling traditional long-term care, and I will say, yes, it's not like the 100 plus that were in the 90s and early 2000s, but I will say the breadth of product design offered by those 7 carriers is a lot deeper than it was even with 100 carriers back in the 90s and early 2000s, right? You could, with just the 7 carriers, you could do a lot more with plan design and designing a plan than you could back then. And the great news is that for the most part, the carriers, all 7 carriers offering products today, those products are priced very solidly based on actual experience and not the guesswork that was quite required years ago. So much so that we now have two new carriers entering the market and maybe more. So that is great news for consumers. So that's where we are today. So what really has changed? Let's talk a little bit. So the reason for all those rate increases mostly was persistency, right? Lapse rates. In the 90s, those products that were incredible. And lapse rates are a major part of your pricing assumptions when pricing long-term care insurance. And back in the early days, carriers didn't know. They didn't know what percentage of the people would lapse their policies. They were assuming, all right, well, the closest data we have for this is to use term life products, in which we assume that at least 10% of the people, usually between 10 and 12% of the people are going to lapse their policies. So that's what we're going to use, right? We're going to assume a 10, maybe 12% lapse rate. Well, guess what? Guess what the lapse rate is with traditional long-term care insurance? What it turned out to be? Under 1%, 0.6 to be exact. So boy, did they get that off, and that was a huge part of pricing these products. Carriers today, I can tell you, NGL uses a 0% lapse rate. NGL assumes everyone is keeping their policies, right? As opposed to years ago when carriers were guessing, between 10 and 12% of the people would lapse. That there enough is a huge change, right? Of course, you also have interest rates, right? Back in the early 90s, mid 90s, no one knew that interest rates would, all of a sudden come crashing down and stay low. They didn't know that. Carriers were a lot more optimistic and figured, all right, well, but the interest rates are now back then were pretty high, and they're gonna, remain that way, or at least they're not going to dip as low as they did. Now carriers are factoring in low and sustained interest rate environments, right? And that they figure that's the norm now, right? So that's another reason why pricing is much more reliable. Of course, morbidity experience, right? Morbidity underwriting tables and pricing tables that didn't exist then now exist now and are much more reliable. Then, of course, the fourth factor is the underwriting. All right. Many of you that were around, especially in the early 90s and mid 90s, know that a lot of carriers made business decisions, right? I can tell you of at least one carrier that if you sold long-term care in a work site for every one or for every 10 approvals you got through underwriting, they would give you a guaranteed issue on someone, right? Individual LTC, not group. So basically, they're saying we're going to buy a claim as long as we get, through underwriting 10 other bad. That turned out to be suicide, right? So there are a lot more business decisions, back in the day that really clouded risk pools, right? That's what it is. It's insurance. It's health insurance with a risk pool, right? And boy, there were some old, carriers, most of which aren't, offering long-term care insurance anymore. They were part of that exodus that really made some, poor and aggressive underwriting moves, and that turned out to be a really bad move. It clouded their risk pool so much that the risk pool essentially became contaminated and was beyond repair. So they shut down the book and started 100% full time trying to fix and rehabilitate the risk pool. Let me refix my. There we go. So there you go. So those are the reasons. But these are the reasons. Long-term care insurance. This is what was fixed, and this is why traditional LTC is much more viable, and for a lot of people, a great, reliable, sustainable solution for a lot of people. However, unfortunately, the views today and a lot of the misinformation people see today are distorted by the mispricing of those old policy forms, right? And that's what we have to overcome, right? Um, and those are the facts. But the facts today, and these are facts, right? And I know with long-term care, especially, rate increases on all those, old policy forms, it's emotional, right? It's purely emotional. Oh my God, my parents, look at all the rate increases they have, and they may not even use the insurance, you know. So, it's, so no, I'm not going to do it. But the facts are, products today are priced on actuarial, on, true actual experience rather than the guesswork. And also, and most importantly, due to, accurate pricing, and I haven't even gone over. It's probably a whole separate thing. Rate stability guardrails that most states have enacted. Believe it or not, the odds of a rate increase on a product bought today are incredibly slim, very slim. In fact, in the world of health insurance, traditional long-term care insurance, right? In the world of health insurance, is probably the least likely product line in health insurance to experience rate increase today. Um, and the bottom line is that for consumers that want the most LTC benefit dollars for the least amount of premium, traditional LTC is their best option. And of course, carriers offering, most carriers offering products today, traditional LTC after the learning curve, right, carry little exposure to the past, which is great, great news of the 7 carriers that are there right now. My little plug about NGL. And NGL, listen, one of the reasons I've been with NGL, I've been in the long-term care insurance industry since 1989, but I've been with NGL for a little over a year, about a year and 4 months. And the reason I came to NGL is because of this reason, right? It's a conservative Midwestern mutual carrier that entered the market in 2016. From the get-go, after the learning curve. So it's in pricing, the pricing on the product line from inception is based on actual experience data that I just went over, right? From the get-go, it was assuming a 0% lapse rate. From the get-go, it was assuming that a low interest rate environment would be the norm forever. And prudent underwriting has always been a mainstay. And I'm going to say prudent underwriting. I'm not going to say unreasonable underwriting, because I think the underwriting is very reasonable, but it is prudent and it is thorough. But that's what's needed if you want to have a risk pool that is not clouded, right? And most importantly, there is no legacy risk pools to manage, right? We don't have to go back and manage old risk pools that were underpriced because, NGL was managed from the get-go. And of course, NGL as such, NGL never, they don't have a rate increase history. NGL has never raised rates ever. And then the cool thing where this comes into play is when, as when you take a long-term care application, the personal worksheet is part of the application, and the carrier has to list its rate increase history. So it's, it's pretty, it's very fulfilling when you look at NGL's rate increase, where it says the company has sold long-term care insurance since 2016 and has never raised its rates in this state or any other state. So that's a fact, and that's good to know. But I truly do think that all the carriers, right, that are selling long-term care today, they're over the learning curve. They know what they're doing. And I'm glad to state factually that the market is for traditional LTC has never been more reliable. So to close, and then I'll open it up for any questions. Listen, the demand has never been greater than ever. Consumer awareness, the understanding, and it's not just a long-term care insurance market; it's long-term care solutions. And Traditional LTC fills a very important need, and unfortunately, a lot of people still are led to believe that there's not a solution for them because they're looking for the most, LTC bang for the buck from a reliable and stable carrier. But it's available, and that's a fact, despite the emotional baggage from the past. So that is it. Lynn, if anyone has
Yeah.
any questions, I am happy to take any questions or comments at all.
You know, I don't have anyone. Oh, some are just popping in as we speak, in fact. Um, so somebody is asking, can you summarize NGL's financials? So going
Yeah,
along the lines, yeah, of that stability.
of course. Well, so first of all, I can send to you I'm happy to send to you the our financial brochure that talks about that. But I can tell you, NGL has been around from, and I'm going to bring up the financial brochure for you to look at. And I'll drag it on over if I could find it here. I can tell you, NGL has been around since 1916, and tell you what, go ahead and ask. I'm going to bring up the brochure, and you can go ahead and ask another question while
Okay,
I find it. And you know what? Guess what?
I'm
I believe
I'm
I
looking
just
too.
yeah, I believe I've just found it. I just got to get my. Here we go. I'm going to attempt to drag it over to in the screen I'm showing, and hopefully you see it. So NGL is an A-rated carrier, financial assets, and this is, I'm sorry, I misspoke. NGL's been around since 1909, A-rated carrier with financial strength assets of now of almost $5 billion. Um, Business 115 years, and there you go. If anyone
Um,
ever wants, a annual report, I can have that sent too.
and I'm almost wondering if that's something that you would be able to send to me. I just found in my own stash of materials, I'm gonna go ahead and pull. Oop, let's see here. I'm gonna go ahead and share my screen because I don't
Oh,
know
you
if
didn't
we
see it
were
on my.
able to.
Yeah, you know what? I just dragged
No,
it over, and then a little warning bit. So I'm sorry. So yeah, so that's the one from 2 years. So right now,
this was the
uh,
latest one that I had on file at quick reference.
exactly. All right, so it's 4.9 billion. So it's not. So it's pretty much the same. So 4.9 billion dollars of assets.
Okay. So in fact, as long as you're able to send over the latest version of that, we can include this as well as copies of the
Absolutely.
slides in the follow-up email.
Awesome.
Good deal. Let's see if we've got any others. Um, I was told, oh, okay, here we are. Do you need a special license or anything to sell LTC?
Well, with long-term care, you just need your life and health, and it's all state specific. But the big thing, it's not, it's just a basic life and health. And if you're in, I know, North Carolina or a couple other states, you also need like a Medicare, a Medicare addendum or something like that. But the big thing is you have to have your continuing education, right? You need to do, pretty much all states require an 8-hour course to be able to sell long term care. And then every license renewal period, you generally have to do a 4-hour refresher. So it's not so much a special license as you need, as much as you need to have that continuing education.
I think a lot of times people refer to that as partnership. And again, it's not referred to the same way in every state. So I think that may be what they were looking for, or just that word that we use so commonly with that certification.
Right.
Um, So it sounds as though one person is not as experienced in the market, but just wondering. Um, I was told LTC had to be stacked with short-term solutions. It's not that it has to be, but that's a way to cover more of your client's risk.
Oh,
So just
yeah,
like,
absolutely.
yeah,
Yep. Yeah,
with the
yeah.
elimination periods.
You're absolutely right. Listen, it all comes back to everyone's own long-term care solution is unique, right? I mean, we have a lot of different products and tools from which to create your own personalized long-term care solution. And you're absolutely right. In many cases, it's a traditional or even a hybrid product plus a short-term product, short-term care product on top of that, and you get a very customized and appropriate overall long-term care solution for that person. So, and a lot of it also depends on, what I'll call what your health currency is too. There's an old saying that, with traditional LTC, it's your health that buys a policy. Money just pays a premium. So a lot of
Yeah.
people, depending on what your health will allow you to get with one kind of product, many times, you can stack it, and I can see exactly what you're talking about, and that's absolutely appropriate. And that's a good thing. The important thing is that people need to know that there are a lot of different types of products from them to plan, and they can come up with a plan that is totally meaningful and will achieve their objective at a premium that is right for them. So yeah, you're absolutely right.
All right. Another person had commented, I had computer issues and missed the first 15 minutes of this presentation. Can I access it on Golden Care link? You know what? We did record this presentation. I'm not sure how quickly we'll be able to get that link able to be shared, perhaps later today or early tomorrow. But like I said, we will send those follow-up emails that will include the financial sheet, the copies of these slides. We will certainly include a link to that, to the recording of today's presentation as well. All right.
Perfect.
Um, all right. I think that was a very, very educational and well-rounded explanation of what the entire market has gone through. And you're absolutely right. I just feel as though there's so much misinformation and there's that negative residue. There's just, for some reason, such an immediate negative viewpoint. And it doesn't have, that's not necessarily the case. That's not the case for today's plans.
Yeah,
So,
exactly. And it's all emotion, right? It's all very emotional based.
yeah. I'm not sure how much anyone had heard before we got started officially, but I had mentioned to Mike earlier before starting out, I wasn't personally able to go to the ILTCi conference recently. But I did hear so much about the breakout session focused on the long-term care insurance and short-term care insurance industries. And everything that I've heard and all of the comments and feedback that I've gotten, it was all positive. And just like that learning curve slide that Mike shared, we are on an upward trajectory, and there's a lot of opportunity to help people put a plan in place, whether it's a linked benefit hybrid, whether it's traditional long-term care, whether it's short-term care insurance or a standalone home health care plan. It, again, just to reiterate, it's the health that ends up buying the policy. But we have a lot of solutions available, and like I said, it's on an upward trajectory. So things are looking to be very good and exciting in the coming year.
Absolutely. I will say, carriers in the traditional space are definitely seeing an upswing. Sales are up. People are understanding, and and more carriers are coming into the market. So I think things are set up, very nicely right now.
Yeah. So I don't know if anyone else is struggling to get their questions in, but also know that our marketing team will follow up afterwards. See if you did have any other questions, if there's anything else Golden Care can do to help set you up for success. Any of the agents attending, if you haven't yet visited our goldencareagent.com website, I invite you to go out there. You'll see a whole list of these value added services, value added tools that we offer, and our website is a great place to find additional details on those. Mike with NGL, thank you so much for your time today. This was a very good presentation, and I can absolutely see why you're getting such positive feedback from the agents who attend. So very, very appreciative. Thank you for your time today and for coming on as our guest speaker.
Thank you so much, Lynn. I appreciate it. And you guys are awesome. I mean, you guys are pioneers in this industry, and it's you guys are great partners with not just NGL but all the carriers.
Excellent, excellent. It's all about those relationships and helping people. All
Sure is.
right.
Absolutely.
Thank you all so much for joining us today. We're just going to wrap it up. Thank you all. I hope you have a great rest of your day.
Golden Care is looking forward to serving you with new tools, new products, new innovations, and always the best support in the business to help you succeed in 2022. So give us a call at 800-842-7799 or check out our website at www.goldencareagent.com.